Welcome to the Craig Brock Real Estate Show, helping you navigate through all the challenges and pitfalls related to real estate. Craig is San Diego's real estate investment strategist. And now, here's Craig Brock.
Good morning, Southern California. What a glorious day in the bond market. We have mortgage rates at the low of the year. What in the world is happening this morning? Well, we have a pullback in yields because we have the European shares, European markets wavered a 6-year high, but the ECB policy is eyed. The ECB, the European Central Bank, wants to continue pushing forward with the stimulus program. That's helping us more than it is them this morning. A little bit of a pullback on the euro, but we have a scenario where the 10-year Treasury yield, get this, is at 2.55%. This is the low of 2014. Whatever happened to higher mortgage rates this summer? There's been all this talk for the longest time. Well, let's face it, mortgage rates have been plenty higher since July of 2013. We don't need them any higher than they are. But experts predicted that mortgage rates would be much higher than they are right now. The 30-year financing for first-time buyers, FHA program, is at 3.75% without having to pay any origination points. If you have a deal that specifies that you should pay more than that, then you want to jump ship. If you're a veteran, the rate would be the same under VA. The beauty with VA financing is that you don't have to have a down payment with VA financing, and it's more liberal when it comes to underwriting. So if you're a veteran or if you're active duty military, taking advantage of a VA loan is the expert advice. Now, there is a funding fee that's paid to the VA, but that's typical. You can't avoid that unless you have a 10% disability or more from the military, and then in that case, the funding fee goes away. But not everybody's cheering this morning. Even though we have interest rates at the low of the year, a lot of people find that they can't get into the home that they want, and they're not happy. But there is a better way. Yesterday, we talked about seller financing, how seller financing can benefit you if you've been turned down for a mortgage at the big box bank and then went to a mortgage broker only to find out that the scenario was the same. Or maybe you're looking to invest in more property and the bankers told you that you already have too many finance properties. You're not allotted anymore. Well, that just simply isn't fair. Well, we have a better solution for you. That's why we want to bring in Terry Lewis. We spoke to him yesterday. His website is Seller Finance Consultants. sellerfinanceconsultants.com. He can help you get into the home that you desire. He can also help you if you have a home to sell. Let's face it, it just doesn't get any better than this. We've got interest rates at the low of the year. There's over 1,200 people in the Southland that are selling their properties right now with seller financing offered. Good morning, Mr. Lewis. Thanks for joining us here on Financial News and Talk on this Bloomberg network.
Good morning, Craig. Thanks for having me again. I appreciate being here.
Well, absolutely. Like I mentioned, interest rates at the low of the year, not everybody's happy because a lot of people can't get a loan. Or let's face it, even though property values have increased about 12% overall in Southern California over the past 12 months, we have a scenario where many people still owe significantly more on their home than it's worth. And let's face it, if you don't have a Fannie Mae or Freddie Mac loan, or you weren't able to take advantage of President Obama's HAMP program, the home modification plan, you may not be so happy. You might have one of those old stodgy Chase or Washington Mutual loans that wasn't modified, or maybe you're just under a temporary modification, and that temporary modification is a ticking time bomb. What do you say to that?
Yeah, that's true. There's a lot of homeowners that can't refinance because of the new guidelines, and they're maybe stuck with a 5-6% interest rate on their homes, and they're just making that payment every month, and it's just killing them. We do have an option with seller financing where we can actually sell a home that has no equity by seller financing. So these homeowners do have options, and they need to reach out to us to see if we can help them.
Well, it looks like many are taking advantage of the options that you have available. I'm looking at more than a handful of properties that are available for sale at this moment in Fallbrook with seller carryback financing. And let's face it, Fallbrook's a great place indeed, but it's no La Jolla, it's no Del Mar. So consequently, you have to be a little bit more aggressive. And if you don't want to reduce your price, maybe you can't reduce the price because of the existing encumbrance that you have. The encumbrance is all the loans, all inclusive on your property. If you're not able to sell it for enough money to pay off all those liens, then you want to look at the seller carryback option. So you're basically managing the debt like a bank would. You're wrapping it, but this is all done with a professional strategy, and you have these strategies that are available. We're not talking about something that's on a handwritten piece of paper. We're talking about a formal process of being able to help people that are underwater on their home, that have these ticking time bombs, or worse yet, have mortgages that they simply can't pay. And let's face it, I was looking at a chart on realtytrack.com just the other day. There's more than 100 homes right now in the Oceanside area that are in the foreclosure process. My title rep was in my office. He said, Craig, there's your inventory for the summer. What do you have
Yeah.
to say about that? What is the solution?
Well, from a seller's point of view, actually with seller financing, we're finding that you can get about a 10% increase in price. And it's because of the demand. There's a lot of homeowners that can't get a loan, self-employed borrowers, people with dings on their credit, people that actually would like to buy a home to fix up. And in that case, you're not going to get a loan on a fixer-upper because it has issues, and the appraiser won't approve the appraisal won't enable that borrower to get a loan even if they're qualified on that particular house. So seller financing, it allows for a higher price. It allows for a higher interest rate. There's a lot of borrowers that will pay a premium because really their effective interest rate is going to be the same as a regular interest rate with all the fees that are charged for origination and mortgage insurance and all that. And then a third example is the homes that need work. You can have a seller carry a loan on a house, and we did this recently where it needed $100,000 worth of work, and the loan was carried by the seller with 30% down, and the buyer came in and he had reserves to go ahead and fix up a duplex, and so in that case, it would never have qualified for any kind of a loan. The only other option for that seller was all cash to a fix and flipper, and they ended up getting a 20% increase in the price that a flipper was offering, which was huge for that seller.
That's quite a delta. We're talking about a 20% difference in price just because the seller found an esoteric strategy, which is a seller carryback financing. It's all perfectly legal. It's all done with contracts and memorandums, it sounds like. I know that you're the expert on this, Terry, and you have this website set up. But for people that are looking for advice, they can also call you for a free consultation as well, correct?
That's correct. Our phone number is 619-786-5550. The recently enacted Dodd-Frank Act that was enacted in January 10th of this year requires, in most cases, a seller to go through a mortgage loan originator to bless these transactions. So, and that's the service that we offer as a mortgage loan originator, and we're also brokers.
Well, that's fantastic. Well, we are seeing some that are blessed even in Carlsbad. If you'd like to get into a new home in Carlsbad with a seller carryback financing, there's one that's located just north of the La Costa Resort. priced below $700,000. So we're not talking necessarily about having to buy, $100 million properties here. There's properties available in every price range. I was even looking at one that was available in 29 Palms for $85,000. So the market is certainly there. There's a great property even in Fontana that's been fixed up, new stucco roof, etc., priced in the low twos with seller financing. Now, in many cases, you do have to have some skin in the game if you want to get into one of these homes. I know, Terry, you mentioned that particular buyer had 30% down. Now, that's probably on the high side for a down payment on many of these seller carrybacks. Wouldn't you agree? Because most of these are structured with a lower amount of cash to get in.
Yeah, and I would say 10% is probably enough skin in the game in the market we're in. And again, it's the buyer and the seller creating the transaction for themselves. The rules are you're not applying with Fannie Mae or Freddie Mac or FHA or VA. It's what the parties agree to, and that's what's great about this is because each situation is different. And what we do is just basically take the information from the buyer and verify it and give it to the seller, and they get to say, yes, I approve this, or I agree, let's go for it, or no, let's move on to the next one because I don't feel comfortable with the situation. And it's totally in the seller's hands to do this. And there's other ways of doing this as well. There's lease options if you have no money or little money down, and the same rules apply.
Well, Terry, you mentioned the word comfortable there, and I tell you, I get really uncomfortable with some of the things that I hear when it comes to lending practices, to say the least. I'll just keep it at that. I want to be comfortable if I'm executing on this strategy. How can I be comfortable if I'm a seller? Who collects the money? How is the money exchanged? I know going in and in the closing, there's an escrow involved, but after the escrow closes in, say, a couple of weeks or 30 days, what happens at that point? Is there a servicer that's collecting the money from the new buyer and forwarding on to the lien holder if there's a lien on the particular property? Is there like a middleman, so to speak?
Absolutely. All of the, and that's part of the Dodd-Frank Act. There is servicers that are in it as well, and regulation for them. There's actually a servicer in town that charges $15 to collect the payment and then distribute it to the seller or the lender, the lender's bank account. If there's other checks, that obviously the fee increases depending on how many checks they have to write and where they have to go. But the servicer basically handles the account and sends out a letter if it's late, collects late fees. So it's really seamless, and the money just ends up in the bank account of the seller that carried the loan, on the 15th or the 1st of every month. And it's like clockwork. You just open your internet browser to your bank account, and there it is.
Well, that's fantastic. One of the other ancillary items there, the beauty of this for someone that's coming in and buying the home is that this servicer is actually going to make sure that you get the 1099 so you can deduct the mortgage interest. Let's face it, that's the key here. If you're renting, you don't have any kind of an interest deduction. We have John Milikowski, a tax attorney in San Diego, who's on with us once a week, and he mentions these high-level planning strategies to mitigate, to minimize the taxes that you pay. But let's face it, if you're filing a Schedule C and you have that home office and that Schedule C is a negative Schedule C, all of a sudden your home office deduction is completely out the window. The IRS isn't allotting you any kind of a deduction whatsoever. However, if you purchase a home with the seller carryback financing, the deal there is that interest is going to appear on the Schedule A, so you can deduct it. That's the beauty of this strategy. It's not renting by any means. It's actually home ownership, and it's all done with the appropriate documents. Getting your hands on that 1099 at the end of the year is imperative. If you have an independent servicer, they're going to make sure that you achieve that document. And I have to be careful about saying middleman, because when you're looking for a mortgage, you sure as heck don't want a middleman in the way, because a middleman usually means more fees and cost and red tape and everything else. But when it comes to investing in one of these seller carryback properties, you definitely want a middleman. You want a liaison, which is this independent servicer that makes sure that the bank gets paid and to make sure that all the paperwork is taken care of. We're listening to Terry Lewis this morning, who can help you sell your property. There's over 1,200 people in the Southland that are selling their property right at this moment with offering seller carryback financing, offering all-inclusive trust deeds, which are those AITDs. Terry, this is a blast back to the 1980s, isn't it?
It is. It was very prevalent back in the 1980s. And so it's just coming back. History always repeats itself. And so if there is an existing loan on the property, with disclosures to the buyer and the seller, those loans can actually be wrapped around with a new loan. It's not an illegal act or anything like that. And it's so if there is money that's owed on the property, that's not an issue for the seller per se. What I would like to say, though, is also a really neat thing with sellers is there's no appraisals are necessary when they sell or finance a house unless the buyer actually wants to pay for one. And then also one thing that's really, really important is this is passive income for a seller, and a lot of homeowners, don't have retirement plans that are up to par, and maybe their real estate is their only investment, and you can actually sell a home and carry the loan, and it's a passive investment income for that seller, and also they're going to get a higher interest rate than they ever could by maybe 2 or 3 times in the bank. And that's a huge thing for someone that's looking at supplementing their Social Security income or pension income with income from carrying a loan on a house that maybe they're tired of managing. So that's a huge benefit for seller financing.
That's a window of opportunity right there, so you can actually do something with your equity versus having it just lazy idle dollars in your property. Now, I know that there's abundance out there that would say, well, those lazy idle dollars made me $500,000 last year. Well, that's an anomaly. You won't be making $500,000 every year in appreciation. We have had unusual times indeed because of the credit crisis. We'll be entering a more normalized market. I was reading a story just the other day about the young people that are just so burdened with the student loan debt. They can't see any light at the end of the tunnel to be able to save up a customary 10 or 20% down payment in order to get into a home because they're strapped with the student loan debt, and then they get out of college only to find out that the environment is not so great out there for jobs unless you're in the telecom sector in San Diego, and then I suppose you're pretty happy. But let's face it, that's not the majority out there. This could be the solution for you to get into a home with the least amount of money down, and then this could be an opportunity to unload property. And let's face it, if you've got a unique property that's located out in Bonsall or Fallbrook or even in Rancho Cucamonga, if you have a property that's underwater, this is a forgotten solution. Terry, now let me make sure I understand this right. Many real estate agents don't have a lot of vested interest to promote this particular product. Can you just briefly explain why that might be the case? Is it simply because they fail, or they're not good, or they're costly? What is the scenario with this?
Well, I really think it's education. Back in the 80s, I'm in my mid 50s now, and back in the 80s I was in real estate at 21. So there's probably 2 or 3 generations in between myself and today, back then and today. And I don't, we've spent 30 years of real estate agents giving their card to a mortgage professional and saying, go get qualified, and when the mortgage person contacts me and says how much you qualify for, we'll go buy you a house or go find a house for you. And we're back to creativity now. You have to really think out of the box and really educate yourself on what's available and what's out there and what the possibilities are. And given the new regulation, it's just put a lot of barriers in the ability to buy a home. And unless you're going to take on those barriers ferociously, you're not going to end up buying a house. You're going to say, you know what, this is too much of a hassle. I'll just keep renting, and that's not the right way to approach this. And so I think education and realtors just haven't put in the time to learn what the alternatives are, and they need to start doing that, or they're not going to be in the business any longer.
Now, you said barriers. Are you referring to the government? Is it the Dodd-Frank Financial Reform Act that has mandated the strict debt-to-income limits? I mean, let's face it, if you're a self-employed business owner, you have that Schedule C, you have depreciation there for vehicles, trucks, equipment. You also have a lot of your life that's on that Schedule C as well, potentially. Just deductions that all of a sudden you get down to the bottom line of that Schedule C, you thought you made $100,000 only to find out that it's a lot lower than that and you don't qualify for a mortgage. When it comes to buying a home with this strategy, it's a different strategy because you don't have to fit inside that traditional bank underwriting guideline. And let's face it, here at Rancho Financial, we're unplugged. We go right to Fannie Mae, Freddie Mac, so we take off all the overlays that the Bank of America or the Chase or the Citi would have. But still, you have guidelines that have to be followed. It's different in the seller carryback world, correct?
It is different. And to add to what you were just commenting on, I believe in a qualified mortgage, which is part of the Dodd-Frank Act that, again, passed in January of this year, which is really causing all the problems. There, you need a 43% back-end ratio, I believe. Is that not correct? For which means you have to have 57% disposable income to qualify for a loan now. Is that not how it?
That's correct. You have to make about $85,000 in San Diego just to afford the median home, an astounding number. Terry, we just have about a minute to go here. What's the advice if you have an underwater property?
Give us a call and let's see if we can, if you need to move on and get out of it and still keep your credit intact, just let us analyze the situation and see if we can help you out. We're at 619-786-5550.
You certainly want to analyze the scenario, absolutely. If you haven't been able to take advantage of President Obama's HARP program that's been out for many years, let's face it, if you haven't taken advantage of it by now, you're probably not going to take advantage of it. That's why you need Terry Lewis. Terry, thank you very much for joining us this morning on Financial News and Talk. We really appreciate the sage advice.
Thanks for having me, Craig. Take care.
Yeah, you bet. If you want to see what your situation looks like, I encourage you to give Terry Lewis a call or check out his website. Full transparency there, sellerfinanceconsultants.com. Sellerfinanceconsultants.com if you're looking to unload a property and you have been denied a HAMP modification or if you've been denied HARP. If you had a short sale or foreclosure, chances are pretty high that you were denied on one of the HARP refinances, the Home Affordable Refinance Program that's been so prevalent, served over 2 million homeowners. Not everybody's cheering. If you're not cheering, you want to reach out and talk to Terry Lewis, Seller Finance Consultants. And I'm all things mortgage planning here at Rancho Financial. We can put together a game plan on the fly in just a matter of moments when you contact me at craigbrockmortgage.com. craigbrockmortgage.com.